G'day traders, Mindset Reset. Today we're talking about the open, high, low, and close. So recently in the last few weeks I've put a lot heavier emphasis on the 9:30 a.m. New York equity market opening time for a very specific reason, and that was to keep traders out of getting caught into first hour shenanigans, chasing the news. A lot of traders getting beat up trying to trade the news when there was no setup, or counter trending again just because something's at the high or at the low. And I've talked about the day count, understanding that Monday is the brand new timing cycle in a new week. So Monday's day 1, Tuesday's day 2, Wednesday's day 3, the mid-range point of the week, heading into Wednesday, Thursday, Friday, day 1, day 2, day 3, and Friday's the closing range of the week. So Friday's high and low are significant boundaries when we start a new week on a Monday, especially if Friday perhaps is the high or the low of a week. Now, one of the things that I would like to emphasize today to traders is that 9:30 a.m. New York time is critical to study on the instruments that you're trading, especially if it's indexes, gold, oil. But the currencies will often give either low-hanging fruit or reversal trade setups at that equity market open timing. Now, here's the thing I want traders to kind of grasp is that a lot of traders are saying, you know, well, yeah, but the entry was at 9 o'clock or there was a first hour trade. And as I said to one trader, you can trade, you can hit any trades you want, but I'm emphasizing to you to hit the 9:30 trade if it indeed that setup is there, because when the equity market opens and there's an opportunity at the high of the day slash session or the low of the day slash session for either a trend continuation, a low-hanging fruit trade, or a parabolic reversal opportunity, is that it's more than likely no other major red news on the calendar not going to come back. When we start a new week, we can often see a gap on a Monday, depending on the instrument that you're trading. Sometimes there will be no gap, at which point the closing price from the previous day and the opening price will be basically the same level. But when we head into a new day, that closing price from the previous day can be projected across as a potential area of support or resistance. So we have three main areas that are critical when we are looking at a potential opportunity, and that is obviously the high of the day, the low of the day, and perhaps the closing price slash opening price of the previous day's close or the current day's open. So traders saying, you know, what's significant about that? All you need to be aware of is whether or not there is a template that is setting up for a trade, filtering out the instruments. So we, in some cases, we'll see markets that are in breakout. We can have a day one breakout. We can have markets that are pushing into a high or a low of the day. We saw on the Canadian dollar 3 levels of drop from Friday's high of day that reversed through, it broke out of the low of the current day, reversed and went sideways right at the New York Open for an easy 25, and then it continued towards the high of Friday. I'm not sure if it quite got there, but it was 30 to 40 pips of zero stress, no heat, reversal opportunity. Gold went up 3 levels of rise, and first hour put in a high, second hour reversed off 75, and 9:30 New York came back through the low of the day. High of the day to low of the day. And that's the key thing to understand, is that the opportunities are based on timings, levels, behavior of price. And I reinforce that over and over and over again. The index is NASDAQ. Broke out, pulled back to the breakout level, Friday's high, and went parabolic right on the open. Came back, broke out of the high of the day, dropped down, took out the low, and again marched back up and took out the high of the day again over the course of the trading day. But looking for these opportunities are, again, what I'm looking for is that one trade. High of day, low of day, and if it's already locked in the high or locked in the low and they're going through, so for example on oil we saw that break down first hour, end of the first hour in the second hour, and the New York Open went parabolic through the low of the day. So if we're already inside, we have to have an understanding or a thesis that that high or low of the day is already locked in. But 9:30, as I repeat, I'm going to keep emphasizing that until traders that are struggling getting that consistency. So if they pump it up 3 levels, there's no major red news on the calendar. They take out the high of the day, 9:30 opens inside. It's going back down to the low of the day. If it's broken out, it may trade back into the breakout level. But on gold specifically, we popped the top, we've triggered breakouts, we've hit stops, whatever you want to call it. Coiled back inside 9:30, a little 2-bar 1-2 reversal, 9:34 straight down through to the low of the day. An easy free cash Monday to start the week. We saw Euro Oz, I believe the Japanese yen, the pound yen continued later in the session. So coming back to timings, not all these pairs are going to move exactly when you want them to. So again, that comes back to filtering out the highest possibility / probability instrument in the session that you're trading. How do we do that? We can look at the scanner and look at stuff that's up 3% on the day. That's a reference point to last night's close. So obviously it's moved 3%. It's probably moved 3 levels. We can look at something that's broken out and not pulled back yet. Or if we see something that's broken out and it's pulled back, then we'd be looking for the low-hanging fruit continuation. Previous days highs and lows. High, low, open and close. Open, low, high, close. Open, high, low, close. Whatever that may be. But the opening price, the closing price, these are all levels that can be significant. And the high of day, low of day. If it breaks higher, makes a higher high and dumps before the session begins, think pump. If it pumps before the session begins, I'm thinking dump. Especially if we take out the high of the day or the low of the day. So these are really important. 9:30 New York. We have some major red news the next couple of days, I believe. Not a really heavy week for news, but we do have some major red news. But again, if it's not 10 a.m., then 9:30 is my go-to time, because once the market's digested that information, we go back to the original game plan, looking for stuff that's 3 levels either pumped up for a dump or 3 levels dumped down for the pump. 9:30 New York open. Key critical time, high, low, open, close. Very simple levels. Basically, there's 3 levels if there's been no gap. Closing price, high and low of the day. They're either dumping it back down, and that closing area may be a level of support or resistance, or they're pumping it back up. Peak formations are up for the dump. Peak formations are down for the pump. Hectic, crazy week. Enjoying the last few weeks of summer holidays, and sun and some swims in. Enjoy the lake. We'll get on the technical videos. It's just been a chaotic weekend, so thank you. We'll talk soon, traders. 1% better every single day. Congratulations to the traders who hit those trades today. It's Monday, Free Cash Monday, day 1 in a new week. Have a great day, and may the markets go with you.